So this last account that we have in the balance of payments, it's quite interesting because let me give you an example. Imagine that in Mexico 1 year, we ended up with a balance of plus 5 million dollars in the current account, right? Current account plus 5 million because we received more money from selling goods, services, and transfers and investment income. We received more, so plus 5. And then in the financial account, maybe we have a deficit of -1. This will be financial account. That means that in terms of financial investment, Mexican investors sent more money abroad than the money that Mexico received. So that means that in our pocket, in the reserves, that's how we call it, that those are the savings from the country, we should have +4, right? Because +5 -1 equals 4. So this should be the reserves, or this should be the savings from the country. But imagine that by the end of the year, you see these numbers, but in your pocket, you have 40. You have $40. So you're like, how can this happen? Why do I have more money than the money that I supposed to have? So this can only happen because maybe you didn't account for those transactions because you only accounted these transactions, right? Goods, services, investment income, unilateral transfers, or investments. But maybe there are some transactions that the government doesn't account for. So usually the main source of these things, or an important source of these things, are the black market. So it is possible that this difference comes from, I don't know, a drug cartel or the mafia or something like that, because they do a lot of exports, right? They sell drugs to Europe, the US, and all those countries, and they receive a lot of dollars. But of course, those transactions are not registered in here because who is going to, it's not legal. Maybe if it becomes legal, it might appear in here, but right now it's not legal. So that money never appears in the database from the government. So in the end, Mexico ends up with more money than what they are supposed to have. So what will happen is that in order to make this fair or to make this equal, we need to account for plus 36, I think that's the number, in this account that we call net errors and omissions. Uh, I gave you one example, which is the black market. The black market is an important source from net errors because technically net errors are things that the government doesn't report or the government can't account because the people who do this don't tell them. And the black market is a good example. But also other examples are things that are not that illegal, like maybe, or not illegal at all. Like maybe you went on a holiday to Disney and you came back with $100 in your pocket because you didn't spend them in the US. So you came back with $100 and you sell these $100 to your cousin here in Mexico because he's going on, I don't know, he needs dollars. So those $100 are not reported either here or here. So that means that in the end, those $100 are net errors and omissions. That's another example of this. In general, it's any transaction that is just not reported to the government, so they can't account it in here or in here. So when we do the exercises about categorizing these transactions, if you can't fit them in here or in here, in the current or in the financial account, then it will be part of net errors and omissions. Don't worry about this topic that much. In the end, with practice, I think it will become clearer. I will give you really kind of, I don't know how to call them, like weird examples to make you have some mistakes. So I will try for you to make the mistake in practice, in the activity, and not in the exam. And I think like after doing several categorizations of transactions, then it will become clearer for you. And finally, of course, reserves and related are the savings. Is this thing like if you add the result on the current account plus the financial account plus net errors and omissions, you will end up with the reserves unrelated. So that will be the end of this video. In the next video, I will explain the impact of this on the economy, because why are we studying this? It's very, I don't know, technical or conceptual. So let's put it into a kind of business perspective. So that will be the next video.